We have now Vikas Khemani with us, founder at Carnelian Asset Management and Advisors, coming in on all of the big events that have happened over the weekend and how he sees trade pan out. Vikas, always a pleasure to speak with you. You know, I just want to understand your view on how much of a factor is a September Fed rate cut going to be for the Indian markets and for Indian investors. I mean, you're seeing that pop in IT stocks today, but is there any significant and long-term impact for us?
I think clear implication would be definitely from a flows perspective. As you know that whenever interest rates are hiked in US or Fed raises the interest rates, most investors pull out money from emerging markets. And that's the reason we've been seeing outflows from emerging markets, including India, in the last 2-3 years. And I think it, in that sense, marks the reversal of that trend. And, I think probably we will start seeing positive flows towards India with that cut. Of course, it might take time, it might happen, but the trend will reverse. And, of course, secondly, also with the interest rates coming down, bit of a spending might come up on the IT side. And I mean, we've always said that IT is the best trade on the interest rates coming down in US. So that should play out. And as a result of that, I think IT has been in a strong offering for quite the last 1 quarter or so, as the rate cut expectations started getting built in. So as it happens, it will only, I think, do well.
Vikas, would you actually recommend or see a reason to buy in on IT right now, considering if all of this pans out over the next month, you have maybe, headwinds coming in for the space? Do you think you would be constructive on IT in a more specific manner?
We've been constructive on IT for quite some time. It's not new. So, I mean, we don't take call based on a particular event and reacting. We were expecting this for quite some time. We have been saying that IT is the best trade on interest rates coming down in US. And our hypothesis was that in US, Fed will start cutting rates sooner than later. And we've been holding this view for 6. We don't try to time or react based on the particular event coming out. But yes, our view on IT continues to remain positive. It was positive, it continues to remain positive.
So of course, getting beyond the Fed-led rally and anticipation about this much talked about rate cut, are you currently concerned about frothy valuations? Because these are times when we're seeing a spike in valuations across sectors, across market caps. There are stocks and sectors on the opposite end of the spectrum, such as maybe EV and traditional autos, or quick commerce and retail players. Both ends of the spectrum are doing extremely well, but there'll only be one winner, which makes me think that this market is frothy and there is a lack of discipline in investing. Is this something you're concerned about, Vikas?
These are very kind of far-sweeping statements, that lack of discipline in investing. In my opinion, in every bull market, there are excesses. In all kind of market, there are excesses. And, there are different kind of hypotheses being made. I have been maintaining for quite some time that we don't find any markets expensive. They are not cheap, but they are not expensive. They are in a fair value zone. The kind of, the growth which India is witnessing, in my opinion, anybody who says India is expensive is doing, disservice to the investors who are, willing to take, because this kind of narratives hold investors from investing. Having said that, I am not making a comment saying that a particular company, there are no pockets of excesses. The moment we make a statement that markets are frothy and expensive, people get scared. But at the same time, I can tell you we are fully invested. We find, investable opportunity at this point in time in the market. But yes, you've got to, investing is not about...
If you don't think they're too expensive, and if valuations are not frothy, then where is the opportunity? Why don't you tell our viewers, if they've got incremental capital to allocate, where should that incremental money be going into?
It should be going into entire India story. It is manufacturing.
Because, right. So manufacturing being one sector, what else do you like right now, Vikas?
You got to tell me that. I mean, let me complete my statement. So there are opportunities in manufacturing, there are opportunities in financial, there are opportunities in consumption, There are opportunities in services, including IT services. There are opportunities in infrastructure space. Each of them have opportunity, and each of them have excesses. It is job of an investor to, or people like us, to identify where risk reward lies in investing. India is happening in a very big way across all these 5 buckets. There are many opportunities which are there, and so hence, and I like I said, we are fully invested. So if there was frothy valuation, we wouldn't be fully invested. The portfolio characteristics of some of our holding is 24-25% earning growth, 19% ROE, 0.1% debt to equity ratio, 0.9 times price to PEG ratio. So if you are able to construct a portfolio like this in a market like this, it clearly says that there are opportunities. And very often what happens is we miss from a very long-term perspective. I've been hearing this market valuation expensive narrative for last 8 months, 9 months specifically, and the market continues to do well. So in my opinion, looking at 1 or 2 or 3 particular sector stocks or excesses, we should not talk about overall markets being frothy.
Each to its own, I guess. But let's not forget.
Absolutely.
Thank you, Vikas.